Okay, quick weekend look through the markets. Not done one in a few weeks, so we'll just follow on from the theme of the last one, I suppose, if I can remember. But basically, what have I been looking at? What have we been looking at? Well, we came into, before the election, transports. I consider the transports a leader. When I see the transports and the DAX moving hand in hand, I take notice. And we drifted lower on the transports, and it literally, it was a 2-day down move, wasn't it, on the transports? Once we saw it, and but the DAX drifted off. The DAX is always a wilder sort of trading market. It always has been, probably always will be. So the DAX has dropped a lot lower. Now, one market does not make a trend being, the trend of the global markets. Obviously, the markets I follow, UK and US, are the US ones affect the UK the most, affect the world the most, don't they? But so I just monitor UK markets and US markets together, and the DAX, throw the DAX in the mix. I used to throw more European markets in the mix, but they don't help. So anyway, the DAX, it doesn't look great, does it? But it's pretty normal action. Let's just go through the US transports. Make a bear case. I'll come at this. Make a bear case. Put a neckline there and say, well, it could roll over and we could come lower. Yes, I can see that. Industrials, make a bear case. Hard to make a bear case on that. We've just, and one thing I will, I do this a lot. Comes, trade 6-month highs, normal retrace. The general consensus is this is where the world ends. Moves back up, just shy of highs. Comes back in, slightly lower low. General consensus, the world is going to end again. In the real world, all we're seeing here is digestion. And if you looked at the news and how bad everything is out there, I don't have the TV in the office, and you look at the market, you might be saying, well, the market should be doing what the news is doing. Well, these things, the market prices everything in instantly, and I'm just going to run my risk model on how bullish the market is, because that is never wrong, and I will go through that in a second. So, just normal action. S&P basing out, normal action. Came down to an extremely normal area. Traded all-time highs, pulled back to mean trend, moved back up near highs, pulled back to mean trend, back up near highs. Could it? Well, I think it would be actually better if it just traded in a range. Growth stocks, fantastic. Stocks with a reason to go up, fantastic. Coiling market action would probably give good growth stocks more time to trend. And then if the markets do break out, you will get that added little bit of zip in the stocks. So yeah, Nasdaq just going sideways, mean trend. We can move this now, So yeah, the bears out there are going to say, yeah, the market's going to fall through these lows and we're all doomed. I think if the market fell through these lows, it will come down to this area here. It'd be a very normal area, and then what's the worst case scenario is basically. But the thing with investing is, if you are, there is always another story. There's money in the markets for many years. There's always something to write about. They have to scare you with something, and at the end of the day, if you're an investor, you have to invest. If you try and sort of trade around bad news events, well, I'll tell you now, you're not going to trade because there's always a bad news event. You know, if you come into this all doom and gloom, you will miss and it's been a fantastic market since July. Growth stocks started, what we're basing out through the crash, started making some nice moves. So it's been a fantastic market. It's turned into a fantastic year. The year is not over yet, though. The Russell. So the Russell, you know, they were calling it the laggard, and then it basically took this previous high out while the rest of the markets didn't. So it flipped into sort of, well, there's your rotation, you know. You see that the S&P made a lower high, but the Russell made a higher high, and you know, money started to rotate into a little bit more risk there. And you know, we came in extremely normal area, what we call mean trend, and we've just traded back to highs. So the Russell has just flipped full bull. I'm not bothered about this high. I measure my sort of trend models on price action and, you know, trend, and it's just ticked the last price action zone for me. I don't care whether it's traded a new high or not. I know it's not, you know, the highs are up here. It's just my trend model is not bothered about that. So, without getting lost in trend models, the trend model is always right for my time frame, and I'll move on to that in a minute. So the DAX, yes. The FTSE, we just ignore that. It's absolutely doesn't even come into the mix when it comes into trading UK growth stocks, you know. But the 250 sideways in a base, really nice action, and the small caps broke out, first retrace, back to highs, fantastic action. So, you know, yes, we could literally come in on Monday morning and we could be back into a retrace. We do not know where the markets are going. You just have to accept that and trade the right hand edge. So yes, at this point in time, everything's fine. But, you know, I'm not here to read the future. I'm just here to sort of basically give you my roadmap. So let's move over onto a few other things. I suppose we should look at gold, because gold, I know there's a lot of people being saying the top's in on gold. Well, you know, it could be, but, you know, even if it was, it would be picking a top. At the end of the day, it's just come back into mean trend, and we've got what you would call, I call it a swing kicker, but it's kind of a 1, 2, 3 pattern. You know, every reversal at some point on some time frame will have that pattern. You might not see it, you know, close in on the price action, but you've got active low, higher low, high high. You know, you will always get it, active low, higher low, higher. It's very simple action, and in something what's going down, active high, lower low, you will get that as well. But when it comes to time frame analysis, you're never going to trade the short time frame move. I'm never going to trade the short time frame move against the primary trend up move. So clearly, you're never going to take a short here on gold, because the primary trend, you know, that could easily steamroll it over and over and over again, you know. But, you know, the secondary trend price action move in line with the primary trend, well, yes, and that's why you're seeing gold miners all pop at the moment. So, you know, we'll see how that goes. Interesting area to basically have a little bit of a consolidation. And yes, you know, nobody knows whether it's just going to start trending higher or whether it's going to do something like this and then be back in, and, you know, you just don't know. Trade the stocks. Let's move on to currencies. I'll just quickly have a look at Bitcoin. So You know, we did this in real time. If you just look at these other videos, I talked about the first retrace in Bitcoin being where reward to risk will be found, and it hit our screens on this day here to buy this day, and it actually did what we call a swing kicker. You know, I want active low, higher low, and then the higher high was here, and it never looked back. So if anyone was looking for Bitcoin, that one played out like a dream. I suppose we had the same trade in the pound. You know, we said the same thing. This is where they'll scream and shout about, you know, the pound. You know, that's where you'll read the news. This is where reward to risk is found. It came all the way back into pretty messy base, and you know, it reversed in the mean trend area, and it's, you know, 50% back into the, well, it's a bit more into the move. Not trending like Bitcoin, but you know, these currencies are very,
Get down.
sorry about that, these currencies are choppy. They don't trade great smooth moves like you get in stocks. Moving on from that, let's actually just quickly have a look at TLT. You know, our view on TLT is, you know, it's about time this thing just reset a bit. And, you know, we gave it the benefit of the doubt of that might be another baseline, but, you know, so extended on the 2 standard deviation moves. Huge spike up there. I would say pretty, you know, we're going on the belief that this thing can just drift off lower, and every pop is getting sold into, you'll notice, on distribution bars. We actually got accumulation here, and then back down it went. So let's just quickly have a look. I'll actually just use dollar bull as well, and you know, this thing here, you know, on the old seesaw, dollar down, commodities up, and you know, this was the first zone of mean trend in the downtrend, and it visited it again here. So this is where all the commodities dived, but should put a red circle on that really. But what I will say, when I look through these markets, it's kind of, you know, we're looking at just what's happened now, because it's, you know, it's already happened. But the way I screen stocks, we see it in the stocks. You know, we don't have to come and look at the what's the dollar doing to see what the stocks are going to do. It because I screen stocks every day. You know, I see what's moving into the screens in real time, and so, you know, we see the move. We see like you know, there's basically the screens will be, you know, it'll be the small cap screens or the large cap screens. We'll see what's moving. Our small caps are on volume, our large caps on volume, and we'll also see sectors. You know, is gold on volume? Yes, gold started filling into the screens again, didn't it? So we see the move in real time in the stocks. We don't have to come and look at the actual commodities to do that. So by the time you see it in the commodities, you've missed it in the stocks, is basically what I'm trying to say. So I'll just buzz through my trend models. You know, I always run these. I run my my market risk on these, and they've been slowly sort of ticking higher. And a month or so back, we had a strong move up into bullish areas, and for me, my personal view was this is a buy the dip. The next dip is a buy the dip after that push into the bullish readings on the trend model. And you know, I've rode a portfolio what was 80% invested all the way through the last little. We had two rough days last week, I think, or was it the week before? And the portfolio's just been ploughing through all-time highs again. So that was my sort of plan going into that. A lot of good stocks out there, fantastic stocks. A lot of stocks went through the screens last week. So many good quality sort of, and the US screens were absolutely loaded this week with the great ideas. So, Europe's still struggling, isn't it? US just tick full bull in my models. Yes, that can change going forward. My 350 trend model, where I run the 350 stocks in the UK, this one had a couple of ticks down prior, and it's just had a pretty solid tick back up. We're not punching right up into, good trending markets tend to bring this right up here, and it will twitch up and down. Pullbacks will go back into the orange is basically what I'm saying. Yellow, orange, whatever colour it is. And this was the short-term pullback we had, the secondary trend pullback we had, and the primary trend stayed strong. So that is good action. And these are the closing highs. So the closing highs, we're in that zone. We had a tick down last week, obviously on a pretty soft week, and it's been great. This is great action. Markets where it's in this 200 to 600 range are good markets. And that's what we're in at the moment. So it's just a little bit of an update. At the moment there's so many good growth stocks out there at the moment, and a lot of people might be saying COVID stocks. At the end of the day, I'm screening for stocks with growth, real growth, accelerating growth. And it doesn't matter if they're in the area what's benefiting from COVID. Do you think it's that the future is going to change much in the time? In the lifetime of a trend in a stock? It's just not going to change that fast, is it? The ones what have absolutely are just popping on basically talk of, it's like the old with the companies what were renaming themselves crypto this and crypto that, going up on absolutely nothing isn't, they're just going to come back in, aren't they? They're just all going to crash and burn as they always do. But the ones that are going up on real profits from, on the back of what's happened, do you think that's going to change overnight? I think it's going to last longer than the average trend in a growth stock lasts, in my view anyway. So I'll just keep riding those trends. So a little bit higgledy-piggledy on today's update, because I always just do these freestyle, have no plan, I just click record. So hopefully everyone's had a good week. It's been a fantastic week for us at Trading Bases. A little bit of a wobbly week last week, but we went into last week at all-time highs, and I went into last week at all-time highs. Made a new all-time high on the Monday, and then I think it was the Tuesday and Wednesday we had a little bit of a wobble, something like that, and a little bit of vol in the portfolio, and then straight back up. Fantastic. No stops hit. I rotated out of a couple of commodity trades because I had add points and so many other things I wanted to sort of, other opportunities what I thought were sort of going to move now rather than later. As it turns out, the commodity ones have popped as well. So, happy days all around. Okay, cheers all.